All right, I'm excited about this. So we're gonna start talking about moving into cryptocurrencies, starting to understand maybe how we got into it, and specifically, Bitcoin was probably, my God, like 2000s maybe. So, it was 2017, very big year for cryptocurrency. I'm gonna talk about how I got into it. So let's get going. So obviously we're transitioning from a summer of trading stocks, 9 to noon every day, basically, and it was awesome. I loved it. So the problem was once school starts approaching, you can't really trade the 9:30 opening bell in the middle of second period. I asked them to give me a study hall in second period. They wouldn't go for it. So 7 classes, can't cut anything. Can't trade stocks during school, basically. Can't trade 9 to noon anyway. Swing trading, sure, but you can't have that whole active, really engaged experience. So I started to look towards other ways to do that, and cryptocurrencies start to pop up in the whole tech space, and I'm thinking, okay, I had a little bit of background in cryptocurrencies. The year prior, for Christmas, right, like I built my first computer, that was the computer I traded on. So I kind of understood, like at a fundamental computer level, how the consensus mechanisms behind all the stuff like from Bitcoin or the thousands and thousands of other cryptocurrencies. I sort of understood at a baseline level how the proof of work consensus algorithms that actually power those cryptocurrencies, right? So the algorithms that ensure that the network doesn't have double spent transactions and that the digital cash is actually, authentic. This is owned by Address X on the cryptocurrency network, based off of the open public private key infrastructure, right? So you can go to the open public ledger and you've got address, it's just a bunch of numbers and letters, and you can see the transaction history, and you can see all of the Bitcoin or whatever the coin is in the wallet, and then you can also trace the history of payments from other addresses, so you can really go and with most cryptocurrencies, there's a couple privacy-based ones where it won't let you, but the point is it's very open, public, transparent ledger. So you're gonna see everything that's going on and the whole history of where the money's moving in the network, and that's created, stored, and constantly updated on a blockchain ledger with bigger cryptocurrencies like Bitcoin. So you'll have a system where if people want, first of all, the ledger, right, is just like a full transaction history of the transactions in the network, so whatever the coin is, right? So you'll have, a system where you can look publicly at it, and it's held together, right? The whole history is recorded on independent nodes or computers, in essence, that will use their computing power to load the ledger, and then it loads that ledger from a decentralized network of other users who already have the ledger, and it's based on what the majority of the network agrees upon based on their hashing power or their computing power. So whatever the most computing power ledger, whatever ledger they agree on the most, that's the ledger that is put in fact. That's the ledger that says how much money is in any given wallet, since the money in the wallet, for at least the bigger coins, is just an unspent transaction output. So money got sent to that wallet and now it has the ability to pay other people. So it's a totally closed system, obviously without credit on on-chain transactions. So the point is, I had a pretty decent fundamental understanding of how the consensus mechanisms and the proof of work that the computers did were actually going through to get to that point in a cryptocurrency. So I started researching cryptocurrencies as summer drew to an end, because, obviously there's thousands of these coins. It's a financial market. There are significant capital gains, as has been seen by Bitcoin, which was actually just a tremendous ABCD pattern. If you guys don't know what an ABCD pattern is, or you just want to get a better understanding of it, I think it's like chapter 24 in the book, maybe a little bit later, but it's in part 2. It's a phenomenal trading pattern. So Bitcoin had like this big ABCD pattern when they were at about $2,000, right? So even before I did a whole lot of market research, based off the technicals alone, right, not the fundamentals, based off the technicals, on a long-term swing trading setup, you could see there was something really happening here if they completed this ABCD setup. Obviously, just one factor to consider among many, but it's an extremely strong setup. Highly recommend check out a chapter in the book on that, because that's a very good indicator and technical setup for 9 to noon trading across all asset classes. Really, that it's just a phenomenal. There's been so many great trades based on that. It's a great, very reliable setup. So, point is, started getting into cryptocurrencies, and I made a decision right early on. Right before school started, maybe a couple weeks before school started, Bitcoin, about $2,000, and just as a frame of reference for where the time is, right? Obviously, if you've been following cryptocurrencies up till that crash of 2017, it was, give or take a little under 20. So it was a very quick moving market in the sense that you have all this unfelt value, and then at the same time, just speculation moving into the market. So it was a very, very crazy time over the course of the next 4 or 5 months. And it's just a phenomenal experience overall. But we'll get to that in just a sec. Point is that started, and I made the decision, I'm going to split up my funds, right? I decided I was going to allocate, about $5,500, something like that, to put into mining, put into mining, and put into trading cryptocurrencies. So at the time, that was like give or take half my portfolio in investable liquid assets. So I was just moving back and forth, and I decided for diversification purposes, obviously, this is a totally different market sector than what all of my other assets were, which were, of course, stocks. So you got about half in stocks and half in cryptocurrencies. And then with stocks, it's about half in actively managed stock positions and half in long-term stock positions. And especially once school started, we started to really solidify those long-term stock positions, because you just aren't going to be trading as much when school starts. And especially when cryptocurrency started taking off, I really, backed away from stocks, because at the market at the time, right, you had stuff moving literally 90% a day, every single day. And you have that in the market, but you only have that in 9 to noon stocks that are trading off those stock screeners we talk about towards the end of the book, I think chapter 36. So to have a 90% gain on a swing trade, not an active day trade, it was pretty rare in the market, since there's a whole lot more liquidity, regulation, foresight, government, et cetera, not as volatile as cryptocurrency markets. So because of that, there was stuff moving, 90%, but it wasn't like 90% in 3 hours like in a 9 to noon stock. It was 90% over the course of like a day or 3. So, or maybe a couple of weeks, right? So it's sort of like in the stock market in the sense of swing trading. You can make, very, very strong gains like that. And the point with that is that I can trade that throughout school, right? Because I don't have to be at my desk at 9 o'clock, because cryptocurrencies are currencies. They're traded on 24-hour volatile exchanges. So I can get home after school, after cross-country practice, and I can do market research technical analysis. Similarly, if I have extra time during school, I can go through, you can work through at any time frame that you want, what are the positions you're going to analyze, and then looking at how can you make the best gains given today's movers. And you can make, 5-hour, 6-hour time frame trades with great opportunity for gains without necessarily having to watch it within the context of like a 1-minute candle like you would with maybe a 9 to noon trade. So I looked at that, and I wasn't wholly in cryptocurrencies at the beginning, right? I spent a couple weeks before school started just watching the markets, watching technical setups, and seeing if I actually saw the same technical setups and indicators that I was using in the market. So in the stock market. So luckily, most of the big cryptocurrency exchanges, at least some of them, had some sort of technical indicator where you could use the same things I talk about in the book, like MACD, stochastics, moving averages for sure, but also, Bollinger Bands, all the good stuff that we talk about in part 2 of the book that I have found to be just the most applicable and most reliable technical indicators. Those were available on these cryptocurrency exchanges. And another thing to note, at the time, cryptocurrencies, they were not on Yahoo Finance. I know some of them are now, not all of them, but a good bit. So, if I was looking at Bittrex, they would have, for example, biggest probably trading platform that I used overall, they would have like thousands of these coins, hundreds of these coins, something like that. And you could use all the technical indicators we talk about in the book that I'd been using in the markets over the past 7 months, half year. Honestly, I don't know, 8 months, so, you use all technical indicators. So you could actually, analyze the coins and see, which one is going to trade. And what I realized over the course of a couple of weeks, just watching stuff, not making any positions, just paper trading a little bit, but mostly just analyzing the markets, is I saw the same patterns. Everything I was trading 9 to noon, everything I was swing trading, long-term investing, saw all the same patterns in cryptocurrency trading, cryptocurrencies. So obviously the financial tools and the analysis skills that I'd accumulated were very applicable to that market. There was tremendous breakthroughs. And the thing was, especially with candlestick setups and overall setups, based on patterns and a head and shoulders, stuff like that, where it's based on the candlestick price movements, is you'd have the same movement you'd see in the market, but they would just be multiplied by 10x the volatility, right? So you're getting even better gains with the same amount of technical work, technical analysis. So it was just a drop dead clear, cryptocurrencies at this time are the better place to have investments and to trade actively. Now at the same time, obviously, they were seen as risky. It's cryptocurrencies, and especially pre-2007 bull run. It's very new time. It's very new technology. I'd never heard of it from anyone else, or I just found it on a whim looking at computer parts. And someone's using graphics card, GTX 1070 to mine Ethereum. And then I had another investing group I was in, and I just kind of, I didn't really do a whole lot with it. It was just on the side. But there was some guy, and he was telling everyone to buy Ethereum when it was I don't know, $5 or $15, something like that. Maybe it was 30. It was definitely under $50 if I remember correctly. But it was about a month later, I feel the price tripled off my memory. So I just had no idea what I didn't know what these cryptocurrencies were at all. So I was dude, what's Coinbase, right? Or what are these cryptocurrency exchanges? So I didn't pay a whole lot of attention to it. But once you really start to see, just phenomenal gains based on technical analysis, based on fundamental growth, and also just money moving into the market. And you got to understand, at a certain point, you can understand that it's probably a bubble, but you can still make profit up to the point where everything goes wrong, right? So the risk with it was, obviously this market is growing insanely quickly. This probably isn't going to be a sustainable long-term practice, at least as it was, right? With 90% movers every single day, that's not a sustainable market. But it was an emerging financial sector that was coming out, and there was just phenomenal opportunity. It was the growth of a stock market for 10 years in a span of 4 or 5 months. So I jumped on that train pretty quickly. So I'm going to talk more about my mining, cryptocurrency mining in another video, because it just doesn't fit into this. It was a big experience, different experience. Long story short, I make the decision. I got 5 some odd grand, and I say, okay, I'm gonna put a little over, 4.5 grand into a cryptocurrency mining rig, and I'm gonna put $1 grand into a day trading fund, or a active trading fund, swing term, whatever, right? So, the difference was mining, which I'm not going to get into here. I'll do another video on mining. It was consistent income, right? That was the goal with it. was it was a safer investment in a risky space. So you were looking at bringing in consistent profits, more consistent profits, sort of like a residual bond income, something like that, which wasn't really, my area of expertise. Investing in cryptocurrency mining, I'd never done it before. I just started mining on my computer I built, and it was very profitable at the time, so made sense to start something with that, and it wasn't aligned with my core investing strategies, but I made a mistake. I was like, you know what, let's go really hard into this one sector that I haven't really been focusing on a lot. Excuse me. And wasn't the best decision. I'll talk more about it in that video. Just watch for it. It'll come out here soon. That'll be the video on cryptocurrency mining. So with the money I set aside for trading, probably should have been more, but can't really look back at it. Got about $1,000 and just start trading with it. The great thing with cryptocurrencies is everything's like fractional share pretty much. Since it's a currency, you can buy decimal points of anything, so you're pretty much can have a position of any value that you want. Since Bitcoin or whatever they all go out like 20 decimal places or 15, something like that, something crazy, right? So you can have pretty much any amount you want, so not a big deal. You could buy fractional shares, you could invest in whatever you wanted, and it was set aside for active swing trading, because again, with the cryptocurrency mining, that was getting to a point where I was bringing in long-term investments in the bigger stable coins like Bitcoin, Ether, Litecoin, whatever, right? So the big three at the time, those were the big three, nothing else in the marketplace. So I was bringing in stable long-term investments. That was the goal through cryptocurrency mining. So with the swing trading, I was looking at the thousands of other cryptocurrencies in the market and working through what I was just active trading with those. Those were actively managed positions. So junior year starts, we start on the mining rig and we start on trading cryptocurrencies. And we're basically doing that every day. It was a really, really crazy market at the time. There was just so much speculation, so much movement, and you really started to see some of these huge, percent gains every single day. So now that we've gotten, we've set the stage, we've got a baseline understanding of how we transition from stocks to cryptocurrencies. Let's go ahead and move on to the next video, which is going to be the cryptocurrency trading market from I'd say August, maybe July 2017, all the way up until the crash in December. So hope to see you guys there. I think it'd be really cool. Thanks.